Hello everyone. We'll get started in just a minute. I'm just reviewing some of these charts. Yeah, that's accurate. All right, it's 4:25 as promised. Hello everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 22nd, 2022, and I'm coming at you live for the second time, live for the first time, but for the second time for the Tuesday live stream. Welcome to the Tuesday live stream. Thanks for joining. If you're here or if you're watching and listening to the recording, please like the stream. It helps with the YouTube algorithm or whatever. And subscribe if you're not already subscribed. We'd love to have you. Okay, so today we're going to be looking primarily at Bitcoin, and the title of the stream is what Bitcoin is most likely to do. Obviously, nobody has a crystal ball. I don't have a crystal ball, no matter how confident I am in my charting abilities, okay? That's my edge. I like to say that, well, it's not just I like to say, it's like, the numbers prove it, or the numbers kind of bear it out, that my calls on the charts are more often than not correct. That doesn't always translate to wins in trading, or at least it didn't before, before I really refined my risk management strategy. We can talk about that in a bit. But all I'm saying is that is my edge. Even still, even if I have an 80+% hit rate in terms of reading, on my swings, I don't know what is going to happen next. That's very important to say. I don't know, okay? And so this is all probability. I think by looking at the charts from the information that I've gleaned, that it's more likely than not that we go up from here and not break down, okay? And I'm going to tell you why in a moment. We're going to go and get into that. So we're on the 15-minute chart, okay? Actually, let's zoom out. Zoom out for 1 second on the 30-minute chart, okay? And here's what we have so far, okay? For those of you who are not subscribed, let's get a little context, okay? So this is the Bitcoin chart. This line right here that you see is our 86-day support. It's support because we're above it. It was resistance while we were below it, okay? Let's zoom out even more just to illustrate that. Even more. Let's see. Let's zoom out on the 4-hourly. Okay, and you see for 86 days straight, Bitcoin was forming lower highs and lower lows, okay? That movement down, that trajectory down can be captured by that trend line. That is a strong point of support, okay? It was strong resistance as we were coming down under it. Now it's strong support because we're above it, okay? So just get your bearings here. So that line we've got, okay. Now, what's the first move we made out of that resistance, okay? We did some people call a breaker, in Elliott wave theory, you call it an A wave. An A wave is a corrective wave. All corrective waves in Elliott wave theory come in 3 movements, okay? A, B, C, right? Whether ABC, whether WXY or WXYXZ, they're all movements of 3. WXYXZ is a triple 3, okay? It's basically all movements of 3. So we got our first break out of this trend in our A wave, okay? And from there, we made a pivot right here into the price action we're currently in, okay? So what I'm seeing on the charts is simply that because, for a number of reasons, I'm seeing that we are not necessarily going to continue this downtrend right this moment, right? We've pivoted out of the uptrend and we've come down, but we've come down to crucial support, okay? There's crucial support here. And there's support in a number of ways, okay? There's crucial support at the top of this structure, whatever this structure is, okay? There's support there. There's support in our 86-day support line, okay? There's support in the trend line we formed over the past 3-4 days, okay? We formed a strong support to the downside, okay? So there's that support. So we have double support on the bottom side, okay? So if we were to break to the downside, we'd have to break this 3-4 day resistance, then we'd have to break the 86-day resistance, right? And if you pull the fibs from the bottom, swing low, swing high, right? Bottom to the top of this structure, this A wave, right? You see, where are we? We're at crucial support. Do you see that? We're at the golden pocket. We're at the golden mean. We're at the 618, the Fibonacci golden ratio, okay? So we're at crucial support in so many ways. The support looks stronger than the resistance, okay? And let's pull the fibs again, because some people are saying, oh, we lost the golden mean. Hold up. Let's bring that back 1 second. I want to make a point here. Can I bring that back? Can we bring that back? 1 second. Let's see if we can't bring that back. I've got a point to make. Hey, if you guys are just shuffling in, don't forget to like the stream. Share this stream with others who you also think may be interested in sound technical analysis, and subscribe if you're not already subscribed. All right. All right. Let's pull these fibs again. I want to make a point. I want to draw your attention to this price action. Okay. For those who say we've lost this support, we've lost the golden ratio because we've wicked below it, I would say no, we haven't. Okay, and this is something I say on this channel. Those of you who are subscribed may already know. I am, primarily in the school of, Ralph Nelson Elliott, using Elliott wave theory, but I do study other techniques, other styles of trading and technical analysis, and I borrow from a few other sort of schools, here and there. Okay, but I'm not trying to kind of be a master of none, and a jack of all trades, right? I really do focus on this channel on Elliott wave theory, yeah? But one thing that helps me a ton when pulling fibs, whether extensions or retracements, but especially retracements, and I didn't know this when I started, okay? I didn't know this when I started, but this point may help you if you're just starting out. Don't be such a perfectionist. W.D. Gann, one of the most legendary traders ever, okay? This guy had it wasn't even reported, it was documented. He had a documented 92% hit rate, right? He sat with a reporter, locked himself in his study for days and days, took hundreds of trades, and they documented his hit rate as being 92%, okay? He made millions and millions of dollars like 100 years ago, which, in today's money is a lot more than that. Just trading, okay? He knew his stuff. One of the things he says, and his teachings are a bit difficult to understand, in my opinion, right? They're not they're kind of like mysterious, yeah? But one of the simple things he says, very practical things he says, is don't be such a perfectionist. It's funny because this guy was a perfectionist, right? But he says when you're looking at charts, when you're pulling fibs, when you're analyzing, if it's close enough, it may just do. You have to know when to give slack. You have to know when to round, okay? And why do I mention that is because if you say that this broke the 618, to that I'd say, no, it really didn't. It wicked below. And Gann used to say, he has a saying, or not a saying, but like, okay, hello Divine B, thanks for joining the stream. I'm gonna look at comments in a moment. And I will address what you said. I actually think we're going much lower than 30K in the medium short term, but we're gonna get into that. So Gann was saying about the 50% level that it's very important that basically if the 50% level is breached, then that basically means you've lost the war. And if I'm looking at a Fibonacci retracement level, okay, like for instance here, we're looking at here, I gotta zoom out so let me zoom out one sec. Let me fix this so I can, yeah, there we go. Okay, and zoom back in. So here, for instance, right, we're on between the 786 and the 618, right? Pretty much everybody who pulls fibs has 786 and 618. Those are crucial levels. If Gann would say, most likely, I don't know, but according to his 50% theory, if you've breached 50%, right, which is about this level of this pocket, right, between the 618 and the 786, then you can consider the 618 breached, okay? And in my experience, just, 10,000 plus hours of charting and trading, I've also noticed if I'm in a trade and let's say I put my stops right under the 618, when I just started, I would put my stops like right at the 618 because I'm like, oh, I read in a book somewhere that, wave 2 can't retrace beyond the 618 level, so I put my stops right under and I'd get wicked out and I'd be like, what the hell? That's not fair. You're not supposed to do that. I didn't know that things could wick, and I didn't know the extent to which they could wick, okay? But with more experience, I learned, you should allow for some wicking, for some sort of violation of these levels to a certain extent, and I actually documented every single last violation that I saw. I have a Google note with maybe almost 100 different fib violations, I call them, and I'd measure them, and I found that most of the time it's between 0.15% and 0.3%. That's the average, and sometimes it can go as high as 0.43%, but no more, okay? And then without even measuring, I also noticed that the 50% level is pretty much it. If price reaches the 50% level and breaches the 50% level, it's going to the next fib, okay? So that's an important point. So for those of you saying, oh, we've definitely lost the 618 here, I'd beg to differ. Not yet. And I think it's unlikely, especially since we've got this line of support right here, right? This one right here that we've formed for 3 days, okay? So let's zoom out. And if you're getting value from this, like the video, if you haven't yet liked the video. So zooming back out, and let's get rid of these fibs. Just to reiterate my points really quickly, why am I bullish in the immediate short term? One, because we have massive support in this 86-day line, in this 3-day line, all right, support line, and we're pretty much hovering at the top of a channel, a descending channel. Everybody knows, most people know, doing pattern analysis, descending patterns are bullish. They break up, right? And I think a descending channel is something like 75% of the time it breaks up or something like that. I'm not super versed in pattern analysis, but they tend to break bullish, okay? And also it's very encouraging that price is hovering at the top side here of the channel. Now, what do I think is going to happen next specifically? Let's zoom in really quickly to the 5-minute. And I think that we are simply going to complete this ABC correction, right? I see, quite simply, us being in a two-wave correction. Maybe a simple correction. Could be complex, but I'd say it's most likely going to be a simple correction. I see an A wave. I see a B wave. I see us coming down here, okay? Right here on this bed of support. See, support here, support here. I see us coming down here, right? Because we've tested the top once, twice. I think the third time we come down to support here and then we break it on the third go, okay? That's what I'm seeing. I think that price action is currently supporting that thesis that we're going to break out of the channel. So let's say we do, okay? Not 100%, but I think it's likely, okay? Probabilistically, we break out of this channel, right? Let's say we do. So first and foremost, these kinds of channels typically have a target where they formed, okay? So just pattern analysis again. You know, if you form a channel and the formation is up here and it breaks down, the target comes back over here, okay? So that's why I think this third wave is going to find its way up to the top of the channel, all right? And let's do a quick just guesstimate. And I haven't done this before. I'm doing this live with you, okay? Let's just pull our Fibonacci extension tool for this first wave and retracement of the second wave, most likely on this bed of support, right? And where does the 1618 and 2, again, I've not done this before, right? I just did this for the first time with you all. We all know, those of us who study Elliott wave theory, that wave 3 typically falls between the 1618 and the 2 Fibonacci extension, right? So right now we see that the 1618 and the 2 Fibonacci extension is right here at the top of this descending channel. So that would be our wave 3. That also be confluent with our the base of this move here that we broke down from, okay? Right? This M top we broke down from here. It's basically confluent with that, right? We're retesting that support failure, yeah? Because every time you break strong support, you got to retest it, right? So we would be fulfilling two purposes. We one, retest the base of that that support failure, and two, we would break bullish out of this channel, okay? And that would take us to between the 1618 and the 2. That's our third wave. Fourth wave, retracement. If we get a fifth wave, we'd have to, just as I said before, at least hit the 786. Why is that important? Actually, you know what? Okay, let's take one step back, okay? Let's be even more precise. Here's what I think is more likely to happen. And I'm going to tell you why in a second. Here's what's most likely to happen. Why did I do this? Okay, simply put, if this indeed, okay, let's zoom out so I can be very clear here. Okay, I just want to be very clear. Let's actually erase all this. Let's erase all this. Okay. I already talked about the reversal pattern this morning in this morning's sort of update. Okay. Here's what I'm seeing. If this is an A wave, and this initial move right here that I'm showing is a B wave, okay, because this is an A, this is a B. This can't be a full B wave. Why can't it be a full B wave? Because we have to hit the 786 for it to be complete, okay? For this to be a standalone B wave, okay, in a flat correction, we know flat corrections have to hit the minimum of 786 of the A wave. Just finished telling you that we were at strong support, and one of the reasons that it was likely that we break out and not down is because we're at the golden pocket. We're at the 618. The 786 is below this 86-day support, right? At this point, right? Maybe later in time it won't be, but right now, in order for us to make a proper B wave, right? In a B wave, every correction, I started the video saying every single correction, according to Elliott wave theory, comes in 3 waves, okay? Now you'll say, Dean, yeah, this is 3, 1, 2, 3, right? Done. No, because it also has to fulfill the 786 retracement as a flat correction. If it doesn't, that means it's one movement of the a composed B wave, okay? So I hope you're with me here. This is wave 1 of 3 of a B wave. Wave 2 of 3 is this, or something like this, right? Something like, yeah, shit. Sorry, 1 second. I'm psyching myself out. Boom, 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 boom. Oh, yeah. That's it. Wave 2 of 3, it's not a full impulse, okay? That was my point, okay? Because we're looking at this as impulsive price action, which I think it is, but again, it's not a full impulse. What I think we're going to get is something like this. We're going to hit our heads against this resistance, I believe, okay? Which is actually, if you pull the fibs on this move right here, this right here is at the 618. This is at the golden mean of this move, okay? So we'd be going like this. Boom, reject, and come up. Probably, at least we have to hit the 44K level. Why? Because that is the 786, again, of this pattern, okay? And a B wave flat correction has to hit at least 786. That's why I keep saying 44 is the minimum, okay? It can go all the way up to the 1618. I talked about that 2 days ago. So 1618 is currently at 51.5, something like that, okay? And then finally, this is wave 1, this is wave 2. The last wave is impulsive, okay? And I think that last wave, in answer to Divine B, it's claimed that we're going to 30K. I think that last wave breaches 30K for many reasons, okay? And let's get into that really quickly. We'll talk about that more after, in some days, I think, maybe next week during the live stream. I figure that'll be a very, very big topic of discussion once we're hanging out, maybe at the 44 and 50K levels, and some people are going to think that we're just going to continue to go up and form higher highs, okay? I'm saying that we are going to make lower lows, and it's very likely that not only we make lower lows, but I anticipate, and I'm going to tell you why in a second, that we hit at least the 1236, and the 1236 of this A wave, right? Remember, B waves are measured. The retracement of the B wave is measured by the A wave, okay? B wave is just a response to the A wave. A wave breaks the structure. B wave is the counter trend to that. The B wave, the retracement of the A wave, the 1618, which would be the maximum retracement of the B wave, is currently at 21. Well, it's at 21,119. It's not a moving target. It's fixed, right? Because the A wave is finished. 30,000, we all know, was support in the summer. It was support in January of 2021. All right, I'm not going to zoom out and show you, but we've done it a million times on this channel. Between 30 and 31,000 was our support so many times. I anticipate we breach that. Why? Many people perceive and understand that is strong support. Many people have buys set around 30K, okay? Many people are long right below 30K, maybe at 29K. I anticipate that we do get a sort of flushing. There's so much liquidity. Basically what I'm trying to say, there's so much liquidity at 30K and beneath 30K. There's so many stops beneath 30K that we are likely to break 30K, wick down maybe to between 29, 28K. Maybe we wick down into the high 27Ks, okay? So this is where I think we're coming. So it's going to basically look like this. Let's draw it out really quickly. I'm seeing something like this. We're going up here to, let's see. Something like this, right? I can see us making a higher high or coming to these highs right here, range highs. And then a pivot, and then a nuke, okay? And, whoops, exaggeration right here. A nuke down here, okay? I'm looking at that B wave as being pretty heinous, okay? And I mean, there's tons of liquidity down there, right? And the market just loves liquidity. It has nothing to do with a composite man, some devious, sinister character, or a coterie of fat white men that are looking to divest all traders of their funds and liquidate the market. No, it's just people want liquidity. The market wants liquidity, just like water flows downstream, just like, you know, things go from high to low. The universe finds the least path of least resistance. That's basically what it is, right? You know, take the motion out of it. It's just you know, it's just basic economics. So we're coming down here, and once we do that, then I think we pivot and make we make a run for the 50K region once more in the final leg of our two-wave correction. All right, all of this I think is a two-wave correction. That's why we're going up and down. For people who are subscribed, you'll know my larger thesis is that we're in a bear market. We've been in a bear market for but let's jump really quickly into the larger chart. Okay, this is the index chart. Basically, this chart is Bitcoin since it was a penny. Okay, let's jump on the monthly time frame. Just because, you know, we have so many new subscribers. Not so many, right? I'm not Mr. Beast or anything, but we have new subscribers, and some people may never have seen this analysis on this channel. So yeah, this is a chart of Bitcoin since it was a penny, yeah? And essentially, when I analyze large time frame, monthly time frame, I do the same thing as when I do 5-minute or 15-minute time frame analysis. It's all time frame agnostic. That's what's cool about Elliott wave theory, and it's quite accurate, right? So what I'm seeing is that we've got 5 waves up, and we had 5 waves up in the beginning of 2018. Okay, that was pretty much the end of the bull run. Everything after what was it, December 17, January 2018. Everything after that has been corrective, right? And you know, it depends how some people define bull run. Some people define bull run as being higher highs and higher lows. Then it begs the question, what time frame are you looking at? Like, any higher high and higher lows a bull run? No. You know, maybe a succession of higher highs and higher lows. But to me, all this shit is just, this is an A wave. This is a B wave, right? Very clearly 3 waves, right? This is a pivot. And then we nuke down, okay? And that nuke down has got to come to, at the very least, because this is an expanded flat. Let's see. An expanded flat has a target of the 1618 of the A wave. Okay, so I'm seeing us come down to 3,500, something like that, okay? 3,500 to begin with, okay? So that's what I'm seeing with this A wave to begin with, okay? And then obviously that will be the first wave of our 5-wave impulse to the downside. But as you all know, in Elliott wave theory, this first A wave tends to find its way to wave 4 of the previous trend. So if 3,546 right here, which represents the 1618 of this move, is going to be wave 1, wave 2 comes up here, whatever, wave 3, 4, 5, we expect it to come in the region between $300 and $1,500 when it's all said and done. Okay, so that's what I'm seeing. It's a lot of pain, but people shouldn't be so surprised, right? This has been an asset that has been pretty much up only since its inception in 2011, and it's natural for any asset, doesn't matter if it's Bitcoin, gold, or whatever the fundamentals are, it's natural for any asset to trade this way. That's basically the premise of Elliott wave theory. It doesn't matter the asset. You get 5 waves up and then 3 waves down, okay? But some people seem to be under the impression that Bitcoin is different and that it should go up only, and when it goes down, something's wrong or somebody's manipulating, but whatever, okay? We'll see, right? I answer... a lot of people say it's impossible. No way you'll find another. There's no way Bitcoin will go to those prices, right? Whatever, everybody's entitled to their own opinions. I'm not here to argue with your opinions. I'm just here to share my ideas. If you listen, cool. If you don't, cool. And in the meantime, I'm trying to make money, feed my family, and this is my job, and it's fun. So yeah, that's what I'm seeing. That's what I'm seeing on the larger time frame. For those of you who are not subscribed or just newly subscribed to the channel, may not know my high time frame views. Okay, but back to the smaller time frames. That's pretty much what I got. I think we're gonna break out, and I think we're gonna break out. Maybe get rejected on the 618, make a small kind of retracement. Probably that's got to be a 0.5, minimum 0.5 retracement here. This one, right? If it's a zigzag, 786 retracement if it's a flat, right? We all know that. And then come back up, like I said, to at least the 44K region, 44 to 51K, and then down probably to 28, 29K region, okay? And then pivot, and then back up to the 50, 52K region, okay? Anybody have any more comments, ideas? Like, love to know you guys' thoughts. I don't know what the hell I did here. What'd I do? Here we go. Auto. Okay, here we go. Alright, here we are. Yeah, so like my long-term view hasn't changed. That's pretty much been my analysis for months on this channel. My long-term analysis, and that's one of the reasons I'm looking to de-risk. I'm basically waiting for this last run to, sell off all of my positions, spot positions, and just wait for the nuke down before reaccumulating. So Divine B says it will go up after 30K. Yeah, I agree. We're going to visit that 30K region at the end of this B wave, basically in the impulsive portion of this B wave. All said and done, it looks something like this. Boom. Okay. And we've seen this before. Like I love trading this reversal pattern. I talk about it all the time on this channel, maybe every day. But it's something like this: an A wave, a B wave that's a flat correction, usually makes a lower low, and then a pivot, which I call a pivot, and then an impulse, which I call the C-section. Yeah. So yeah, what do you guys think? You guys want to look at any alts or whatever? That's pretty much my analysis. I'd be very surprised if we did not turn back around for all the reasons I stated. Immediate short term, right? Anybody? Let's look very quickly. If nobody has anything, let's just look really quickly at ETH and Litecoin, because that's what we tend to do on this channel. We look at things with high market dominance, meaning they comprise a large portion of the monies traded on in crypto, right? And that gives you a good idea as to what everything else is doing. Instead of looking at like 1,000,001 different assets, I think it's most useful just to look at the big players, yeah? And they have a lot of influence. So in Ethereum, I'm seeing something similar, right? As I've stated many times, you know, the entire market seems to be in reversal, right? Large time frame. And this line in Ethereum is just like in Bitcoin, 86 days down, okay? 3 months down. That A wave is your initial break of structure. That's your breaker, okay? And then we're currently in a B wave, which is basically the counter to this A wave, okay? And this B wave is going to be likely comprised of 3 waves of 3, okay? It's what you call a complex or composed B wave. So you have the first one, which I think we've just finished. And what's happening now, I think it's most clear in ETH. You're getting a reversal. You're getting a reversal pattern. And we're going to zoom in and look at that in a minute. But then you come back up here. You get one of these. You know, that's wave 2 of 3. And then you get your nuke down wave 3 of 3 of the B wave. You get your pivot. And then your test probably of 5,000 for ETH, okay? So that's what I'm seeing in ETH. And let's zoom in really quickly. I really like the reversal pattern in ETH. That's why I want to zoom in on that. I think it's a lot, it's most clear in Ethereum, okay? So again, reversal pattern, it's a succession of 3 flat corrections, okay? I feel like it's so fitting that everything comes in 3s. Everything corrective comes in 3s. It's very simple. It's very elegant. You have to admit, right? It's like everything impulsive in 5, everything corrective in 3s. Okay? You have A wave right here. That's your initial wave. You have your B wave right there. And then you have your C section, which is comprised of 3. 1. This one, okay, this is kind of like I don't know what the hell it is. It seems like an A, B, C, D, E correction. That's what it is, I think. It seems like a triangle correction, an A, B, C, D, E, right? And it's tricky, but that's what I'm getting, okay? So that's the second move, and then the third move, small pivot into impulse. I think we're in impulse right now. We retest for wave 2. We break out, right? In ETH, you see this triangle that's formed. Basically, we're going to break out of it. Looks like maybe retest and then go up, okay? So that's what I'm seeing in ETH. I think the reversal pattern is a lot more clear in Ethereum. You see very clearly those 3 movements, if you will. And what's cool about Ethereum is in Bitcoin, the slant is quite pitched. It's quite slanted. In Ethereum, it's a little more flat, so it's easier to trade. It's easier to recognize, okay? And finally, Litecoin. We have, all right, let's zoom out real quick. I think Litecoin's a little different, okay? And I'm going to show you how I think it's a little different. So Litecoin, just like Bitcoin, just like Ethereum, we have initial break of structure, okay? We had a downtrend, 3-month downtrend designated by this line. I put this line on all the charts. Gotta have the log. You gotta put this on log. So many analysts are charting weekly, monthly time frames, no log chart. It's sloppy. I mean, like, it doesn't even make any sense. How are you supposed to represent all of that price action without using the logarithmic scale? Like, you can get a rough idea as to trends, but then if you want to, get more precise and get precise levels and measure or kind of price points, it's unreliable. It's completely unreliable without using the log scale. Again, small time frames, you don't need them. You don't need it. Large time frames, you're representing, price action from really high and really low, you need the log scale. So that's why this 3 months resistance this line has to be represented using the log scale, or else the line moves significantly. I'll show you. You see that? This is without the log. This is with the log, right? It doesn't even make sense without the log. With the log, it makes much more sense. You can see the line being respected, at least the support of it being respected right here, right? Resistance right here, right? Point. If you're charting, these are little things that you really key in on when you get better and you start thinking about like these details, and they're really important details actually. That's an important detail, I believe. Okay, anyway, so you got your A wave. We've got our B wave. So this is a pivot. I think you get a B wave like this. So 1, 2, 3. I think in Ethereum, in Litecoin, the difference is we breached this support, and we didn't do that in Ethereum. We didn't do that in Bitcoin. And in Ethereum, or in Litecoin rather, I keep saying Ethereum, we're already at the lows of this A wave. We already hit the 786. Okay, that's significant, and I'll tell you why. What did I say in the beginning? I said Bitcoin has to put in another high and it has to put in another low on its B wave, because its B wave can't be standalone, because it doesn't fulfill the important requirement of a 786 flat retracement. Do you guys remember that? Okay, if you don't, just look at the Bitcoin chart, look at what it's printed, and measure this pattern, this descending pattern, right? This middle pattern, the one that we're in, measure it against this A wave and see how much it's retraced. You'll see it's at the 618, at the golden pocket. However, in Litecoin, we fulfilled everything that needs to be fulfilled for a B wave. Okay, we have 3 waves, 1, 2, 3, right? This second wave has retraced to a minimum of the 0.5 of this first wave, which means if it's between the 0.5 and the 618, we know that it's a zigzag retracement. What's a zigzag retracement? It's a 535, a zigzag pattern. It's a 535. Okay, let's pull the fibs really quickly on this. You see that? Boom. You have 5 waves here. You have 3 waves here, right between the 0.5 and the 618 of this movement, right? And then you turn around and you get 5 waves, okay? And we can count that. And actually what you get here in this channel, it's a little tricky, but the more you look at it, the more it seems like it's simply a descending or ending diagonal. Okay, and an ending diagonal, we all know, is a 3, 3, 3, 3, 3. Okay, that's why you have to know your shit. You kind of have to know your if you're counting waves, right? It's not always 1, 2, 3, 4, 5. Okay, you're looking for 5, 3, 5, 3, 5 structures, right? That's like the typical Elliott wave impulsive structure. Sometimes you get ending diagonals, which are 3, 3, 3, 3, 3. Sometimes you get leading diagonals, which are 5, 3, 5, 3, 5. But the 5, 3, 5, 3, 5 in a leading diagonal doesn't represent the same Fibonacci levels as a regular 5, 3, 5, 3, 5, right? You kind of have to know your shit, because it's so hard in the heat of the trade or in the heat of analysis sometimes to make heads or tails of what's going on if you don't have your fundamentals. I've repeated this many times on this channel. If you're serious about trading, you're serious about learning Elliott wave theory, it's cool to watch people on YouTube do it. Most people don't know how to do it. Let's be honest. I'm not being arrogant or anything like that. Most people just haven't put the work in. to really understand, like, a zigzag is 535, a flat is 335, leading diagonal is 535, but in a triangle. Most people don't know what a WXY or WXYXZ is, how to read a complex correction. Most people don't know that, all right? We're early, all right? Most people have learned the rudiments, and, they start streaming or they start sharing, and that's okay. That's okay. But it's not up to them to be accurate and to know their stuff and then to teach it to you. You should know who's talking, who knows what they're talking about and who's not. It's up to you, Anon. If you want to trade well, if you're serious about trading, you're serious about making money trading, buy a reputable source, get a reputable source, a book or a course or whatever, and do it and learn it forwards to backwards. I always recommend Elliott Waves Made Simple. Okay, I always forget the author, but the link to the book is in the description. It's on Amazon, just a few bucks. But it's the best book on Elliott wave theory that I've seen, including Ralph Nelson Elliott's own works. And if you're really a fan, if you're really kind of serious, read Ralph Nelson Elliott's own works, okay? They're a little more arcane, they're a little more kind of in-depth, but, he obviously he knew his shit, but there's certain things that he didn't put together at that time, specifically with the fib, specifically with, just how we have more information, we have more knowledge about his system than he had at that time, okay? But his works are excellent, and I would read that as well. My favorite is The Secret of the Universe. That is one of my favorite books, period. But anyway, yeah, this looks to me like a 3-3-3-3-3 ending diagonal, and we got one wave, two waves. Oh, whoops. That's not how you count it. Let's start over. This would be, let's see. I'd start here. 1, 2, 3. That's my one wave. This is my two wave. 1, 2, 3 up here. Okay. My three wave, the longest, right? Even in a diagonal, 3 can't be the shortest. But it doesn't have to be the longest, but it can't be the shortest, yeah? 1, 2, 3. There's different rules in diagonals. It's just 2 can't be higher than the origination point of 1. 3 can't be the shortest. And that's pretty much it, I think. And then 1, 2, 3. That's what I'm seeing. So it's just you have, when it's all said and done, your zigzag correction here, a 5-3-5. And the cool thing about this, stay with me now, and I'm going to show you one more example of an asset that's done what Litecoin's done. Okay, you might say, oh man, Litecoin is looking really weak, and you probably do a chart of Litecoin versus BTC, and you're like, oh, Litecoin looks really weak. I knew it. It's a shitcoin, whatever. Wait for Litecoin to probably outperform Litecoin, VRA, Chainlink, anything that has completed its B wave is going to be ahead of every other asset that has yet to do so, right? Because we just said Bitcoin's probably going to nuke down to 29, 28. Litecoin doesn't have to test these lows again because it already has. Do you see what I mean? Like, we're already here. So I expect for the next move in Litecoin to very simply be a pivot, boom, boom, and then impulsive price action. And Litecoin, like Link, like VRA, they're not in wave 2. They're still in the B wave of the pivot into the impulse on the way down. Okay, so I anticipate Litecoin, VRA, Link to show positive price action, impulsive price action after this little pivot because of what I'm seeing on the charts. They've already put in, like I said, 3 waves, right? That's all you need for a B wave. You need 3 waves, and you need at least for that middle wave to retrace to at least the 0.5 and 618 of that first wave, okay? In which case, you're good. You're done, okay? So that's what I'm seeing with Litecoin, and same with VRA, right? Let me just show you real quick. You see this. This is your A wave, right? Break of structure. This is your 3 months sort of resistance that we're above now. Now it's support. But you see this. 1, 2, this is at least the 0.5 retracement. Actually, I think it's a flat correction in VRA. Let's see this. This might have hit the 786. Let's see. Top of this. Not quite. Not quite. Okay, so here's what I'm seeing in VRA. A little different than Litecoin. Do you see how... All right, and this goes back to what we were talking about before. Do you see how the 0.5 level, let's say it's right... Actually, we can do this better. Let's say the 0.5 level between the 618 and the 786 is like right here. Let's see, it's probably like right here. I'd say we may have breached it. We may just have breached it ever so slightly. Right here, okay? Right here. We may have breached it ever so slightly. If I have to guess, you know, based on my experience, I'd say that the 618 is lost here. What does that mean? Very simply, this can no longer be a zigzag correction as in the case of Litecoin. It can't. Also, we know that it can't because very simply, we don't even have to be sleuths and, you know, pull out the magnifying glass to see what fib levels were lost, but we know from our basic kind of understanding of Elliott wave corrections is that a flat correction is a 3-3-5 correction, right? 1, 2, 3. If you have 3, 3, 5, you can't have a zigzag, okay? So VRA, just like everything, well, not everything else, just like Bitcoin, VRA, and just like Ethereum, VRA is in a 3-3-5, meaning we still need a retracement. Sorry, it's going to look more like this. Boom, boom. We still need a 786 retracement, right? We still need to hit the 786 of this A wave, okay? Let me not confuse you. When I say 786, I mean of this move right here, okay? And we're probably going to form a higher high. I can see VRA doing this and then nuking with Bitcoin down to the lows, down to the range lows once more, okay? And then obviously, once we're at that point, we do our little pivot into positive price action. I can see VRA going to about 8 cents or something like that. I forget what the analysis was, but VRA is it? Yeah, it's in its B wave. But I'd say 8 to 16 cents. Yeah, that was the analysis because it's in the B wave. It's not in the 2 wave yet. So that's what I'm seeing, and this is the power of just keeping shit simple, like knowing your fundamentals. Like, you don't have to be a whiz and like know exactly what is going to happen, but know exactly like your principles, right? 618 retraces, 2 waves, where do they retrace? Flat corrections, 335 flat corrections have to retrace to a minimum of 786, maximum of 1618, right? Knowing, you know, that zigzag is a 535, so you know, if you see a five waves and then 3 waves, and that those 3 waves retrace to between the 0.5 and the 618, you know you're going to get 5 waves again, okay? Just stuff like that goes a long way. You don't need a crystal ball. You just need to know the basics, yeah? Any kind of... So, all right, we have some more. Ray Pensa, this makes more sense. Sorry if I'm mispronouncing your name. Corey, what's your invalidation of the C wave up? Do you take the ES1 into account when doing your analysis? Corey, I'm sorry, I don't know exactly what you're referring to. If you can specify. Steve, hi Dean, assume the BTC does go up. What is the minimum fib that it will go up to? 786, Steve, because it's a flat. Steve, oh, it's 0.5. I missed the earlier part. Thanks, Dean. No. It can't be 0.5, Steve. Why? Because it's a flat correction, and flat corrections have to retrace to the 786 of the A wave. The B wave, if it's a flat correction, the B wave has to retrace to the minimum of 786. That's why I'm saying 44K is the minimum that I'm looking for. We're not going to get there in a straight line. I think we get rejected first at the 618, which is around 42K. Retrace a bit in, a little way down, and then go back up to between 44 and 51K. Okay? Corey, the S&P 500 as BTC correlates very close to it. What's your invalidation of the C wave up? Do you take the ES1 into account when doing it? Oh, that's what the ES1. See, Corey, I know nothing of traditional markets. The only thing I know about traditional markets, Corey, is that, I do this professionally, right? And as part of my development, I'm trying to get better every day, every single day. It doesn't matter if I make a move, if I win a trade or I lose a trade. I want to know what happened. I want to know why it happened. Not why, but why according to the technicals, right? I'm not going into fundamental details like Powell said this or that. I don't care. I want to know like what the chart has said, and that's pretty much my obsession. Okay, and a big part of trading, more important than even charting, is risk management. Okay, let's go back to the Bitcoin chart real quick, and I think this is a worthwhile discussion. So you all know, because you're subscribed, that I've been saying that we were likely to go up from here, 2 days, 3 days. Divine B was like shaking his hand at me, saying, hey man, you can't say that we're going to go up. We're in a strong downtrend. We're going to nuke, whatever. But, I did my analysis and it seemed like we were going up, okay? And I actually got faked out. I was wrong, but I got faked out right here because I thought this was the end of this sort of movement down, right? I thought this was a reversal, but it seems to me like it was a wave 4, okay? But I started already laddering into my longs at this point, okay? I was wrong, but I'm still in that trade. I didn't lose that trade. I haven't yet lost that trade. And I'm not going to cut it because I'm confident in the analysis that we're going to go back up, and I have enough space, enough support on the downside where I can hide my stops that I can still win this trade, okay? I'm somewhere around here, most of my entries are, okay? Why can I still win that trade? An earlier Dean, meaning Dean a year ago, year and a half ago, would never have still been in this trade. It would be impossible. 1, leverage was too high. 2, the risk management was way off. I didn't ladder in. I took positions all in one go, emptied the magazine all in one, It's just mentality. Even when you're very, very confident, knowing that there's a possibility that you may not be seeing something and you may be off, knowing that, and then, basically doing proper risk management to stay in trades is something that I learned over time by listening to seasoned traders, listening to professional traders, listening to, multimillionaire traders, people who do this for a living. And I watch a lot of different interviews with, famous, non-famous traders, people, market wizards, YouTube channels like Be The Trade. And all of these traders, most of these, 90+% of them are from the traditional markets. And that's pretty much the extent of what I know of the traditional markets, listening to those conversations and them sharing their ideas on mindset and risk management and stuff like that. It's all the same stuff, right? They don't trade, obviously, they're talking about equity curves and market opens and stuff like that. We don't even know that in crypto because we never close, right? The idea of traditional market traders being so focused on time and candle opens and closes. That's a function of their market being regulated from 9 to whatever, and then taking bank holidays and stuff like that. We don't have that. And obviously their market's more mature. I think it's more subject to short-term fundamental swings. Our market isn't. So to answer your question, Corey, I don't ever look at any news whatsoever. I don't look at anything except the Bitcoin chart. I look at pure price action in Bitcoin. Sometimes I corroborate it, as you know, with Ethereum or Litecoin or whatever, something else in the market. But I try not to sort of have my read of the chart influenced. It's my understanding, based on what I understand of technical analysis and Elliott wave theory, that everything is contained in price action. All the fear and greed, the moves, the political moves, the sort of uncertainty, the FUD, whale moves, sort of retail moves, everything can be seen in the chart. I just have to be able to interpret it properly, right? So, for instance, if I'm looking at this, right, and this is indeed in a reversal pattern. Let's say we break out, right, and I think we're going to break out. Then that means that this right here was a reversal pattern, and I was correct, as I said this morning, right? Boom. I kind of have to zoom in to do this. Let me just do this with the pen, or else it's going to take forever. And I'm going to give an example. So this, to me, is a reversal pattern. But I was questioning this over and over again. That's a B wave. I think it's a triangle. And then here's my impulse. I think, boom. Okay. So this, for me, is an A wave. This is a B wave. Or A section. Yeah, B wave, right? And then C section. Okay. That is unorthodox, okay? Typically, I get my reversals and they're on more of a straight plane, okay? Right? They're contained between more or less horizontal lines. They're not necessarily in a downtrend, okay? But, again, if we do break out, that means that we broke out as a function of this reversal pattern. And then I ask myself, I don't really ask myself this, but I could. Why is it that this reversal pattern was so slanted to the downside, right? Technically, as I proved this morning, it is valid. There's no violation of the 1618 of a B wave. This B wave does not violate the 1618 of this B wave. This B wave does not violate the 1618 of this. This B wave does not violate the 1618 of this A wave. This B wave does not violate the 1618 of this A wave, okay? So technically, it's valid, but it's ugly and it's slanted downwards, and you would think that it was basically a continuation of the trend downwards, right? So why is that? Fundamentally speaking, the market is scared shitless, okay? And people are selling off even as prices reversing, even as a number of people, the majority of people, are looking to go long and buying the asset. There's a strong sort of propensity to sell off. That's what that means to me. I don't go into the news and then take that draw that conclusion. The slant of this reversal pattern tells me that. Why? I may not know that, we're on the brink of World War III or whatever. I don't know. I don't care. I'm talking about as a trader, right? I don't care. But the charts have everything in it. That's what I'm trying to say, Corey. Like, if you are able to interpret and read, if you're literate, you're super literate in the charts, you can see everything. That's my belief, okay? That's my opinion. I know a lot of people don't hold that opinion, and that's fine. But I don't believe that any fundamental analysis is necessary in a fundamentally sound asset, right? And that is a caveat. Obviously, if you're trading something that's going to rug, or with very low liquidity, you're going to see violent swings and, maybe it's not going to exist for much longer, and that obviously will show up in the chart as well. But for something that's fundamentally stable, that's able to go through the regular patterns that Ralph Nelson Elliott sort of laid out, you don't have to worry about the fundamentals, because the fundamentals don't change. That's the beauty of trading Bitcoin. The fundamentals are what they are. They're not changing anytime soon. It doesn't matter what happens externally, politically, whatever. It's just, you can just do pure trading. That's why I like it. Okay, so ES1, I still don't know what it is, but if it's related to traditional markets, I don't know. And yes, I do, Corey, last thing, I agree. Everything's correlated. All markets are correlated. The S&P, the gold and silver and oil, and it's all interconnected. That's the rule, not the exception. So when people say Bitcoin's correlated to traditional markets, obviously, yeah, everything's correlated. I agree about the traditional markets adhering to their own regulations and outdated traders. Only asked as the strength of S&P has an effect on BTC. Thanks for your response, though, Dean. Appreciate the TA. Awesome. Yeah. So yeah, that's pretty much what I'm seeing. It looks like if we zoom in to the smaller time frames, looks like we're finally getting our breakdown, and the speed of this breakdown, or shouldn't say the speed, the deliberateness, the slowness of this breakdown also shows strength. Basically, it shows that many people, the fact that we've been consolidating and made strong support at this level, which is, above the 50%. There you go with the 50%. Above the 50% marker of this channel, right? Gann was onto something. Like, we've pretty much spent most of our time recently above the 50% line of this channel, right? And that, to me, is a very strong sign of strength. Secondly, we've tested the tops of the channel once, twice, right? And lastly, the way, let's say this is a breakdown, the way we've broken down very slowly shows me that there's many market participants that are trading in these levels, right? That's a lot of buyers, not many sellers, because we've spent so much time just hanging out there. So it seems to me that there's more buyers at the top of this range than there are sellers, right? Because look, very simply, there's so much more price action on the top than there is on the bottom, right? That's how the price action is so evocative, or can be so evocative of exactly what's going on in the market, with all the things being equal outside fundamentally, or politically, economically. It's just, the story is there, right? The story is there. And then finally, just bringing in a fundamental indicator, or a basic indicator. When I use the word fundamental, it can be kind of confusing, but a basic indicator like volume. And look at the volume peak or spike, and a gradual rise of volume. You see the gradual rise of volume into this position of strength before a purported breakout. That, to me, is very bullish, okay? And yeah, that's about the only indicator I use. I used to use stochastic RSI. I used to use suite of indicators like Vital Algo, partner of the channel. There's a link for it. I think 20 to 30% off with code SDEAN. I used to use all sorts of stuff, and there's nothing wrong with using indicators. But it's just my preference now to pretty much solely use price action and volume. I'll glance at volume from time to time. So yeah, this is looking very, very, very bullish to me. And the fact that the breakdown of this looks to me like a descending a descending wedge, a falling diagonal, or what's it called? An ending diagonal, right? Very quickly, we have our A wave, initial break of structure, visiting the wave 4 region of the previous trend. Our B wave, 1, 2, 3, boom, right? And then 1, 2, I think we get something like that. An ending diagonal, revisiting this level right here, okay? And once we do that, boom, it's off to the races. That's what I'm seeing. Yeah, so I hope this was helpful. Hope this was useful. Let me know if there's anything else you guys want me to go over. If not, I'm going to end the stream. And see you guys tomorrow. Like the video if you haven't liked the video. Share the video with others who you think may also appreciate sound technical analysis, especially analysis in the vein of Elliott wave theory. And subscribe to the channel if you're not yet subscribed. We'd love to have you. And I will see you guys tomorrow. Trade safely. Remember, risk management is everything. It's really cool to be able to track the charts and track price action and, you know, make predictions and know where the price is going, but that's not what makes you profitable or makes you consistent. What makes you profitable and consistent is having a plan for when you're wrong, not being overly exposed, controlling your risk by, you know, knowing what kind of leverage to use, knowing how to ladder into your positions, knowing all of that stuff, just being defensive. That's what will make you really, really profitable, consistent, and then ultimately rich, right? Because you're going to be wrong. And even if you're like, you know, you're 90% right as to what the price is doing and 10% wrong, in that 10%, if you don't have good risk management, all the gains that you've accrued during that times that you were correct, you know, the 90% time that you were correct, then you'll lose that and more even, right? So it's all about risk management. I hope you guys understand that if you're serious about trading. I learned that the hard way. Yep. All right. Take care, everyone. Bye.